Good morning and welcome to Rally Academy. My name is Victor. I'm going to be your host for today's market review. And so we are here to make daily profits, and we're here to look at what the market is doing and how to take advantage to make profit for ourselves. So as usual, I don't think we need to wait for questions, although we have very, very few questions on call at the moment, but we don't have much time today. So I'll just start. So we'll start from our very fundamentals for today, our very fundamentals. All right. Okay. So I'll start from our very fundamentals, which is the Forex factory. All right. Where's my Forex factory? Okay. Uh, what's going on? Just a moment. Try to. Please, can you all see my screen?
Yes, we can see your screen, sir. Good morning.
Okay. Are you seeing my chat or Forex factory? Good morning, sir.
Charts.
No, see chat, sir.
All right. Let me start it again. But no audio. Wow. My Forex factory does not want to display, but it's all right. So basically, for today, we don't have much fundamentals. What we just have is Fed Chair Powell will be speaking later today. All right. Okay. So the Fed Chair Powell is going to be speaking later today, and that will be around 4 p.m. So that's around the major fundamental that we have for today, and it's for the USD. So that means we are clear to trade more of technicals for today. Hopefully, the market will not be slow and the market will move, because it's in the movement of the market that we make our profits. If price is slow to move, then it'll be slow to make profit, right? All right, so now let's start from the, let's say the euro dollar, euro USD. The euro dollar has been trending up. So one of the things you want to do whenever you want to trade any instrument, the first thing is to identify the directional bias, okay? The direction that price is going. So you can do that from your higher time frames. Now, I don't mean the overall direction. Sometimes that might not be the case. What I mean is, where is price headed? Where has it been going for the last few days, for the last few weeks, possibly? And you can do that with your 4-hour time frame, with your daily time frame. It tells you where price has been headed. You can see that for the euro dollar, price has been heading to the upside, right? Price has been heading to the upside for the euro dollar for a while now, which means that we want to look for buys. And when price is heading to the upside, it does things like this: pushes up, does some retracement, further push to the upside. Okay, these are the basic, pattern that price will show while pushing to the upside. As long as this pattern is maintained, then we will safely say we are still in an uptrend. And this is the daily time frame. Currently, price is still pushing up. So we are still expecting that significant retracement. And on my 4-hour time frame, this is how it looks like. Okay, this is what I just marked. On 4-hour time frame, this is how it looks like. So we've identified our directional bias, which shows us that price is pushing to the upside, which means we are looking for opportunities to buy except the market tells us otherwise. All right, except the market tells us otherwise. So you can trade this using any technical tool. For instance, here I have my moving average right here. I have my moving average. Let me take this out. I have my moving averages. So once you understand your directional bias, the main thing now is to look for your entry. Where will I want to enter this trade from? If it is still buying, where is price most likely going to be buying from? So normally, if you're using moving average, you want to trade the moving average bounce, okay? But trading the moving average bounce might not. How many of you have used moving average and you find out that you want to buy at the bounce of moving average, but unfortunately, price doesn't buy at that time? So something like this. Even though we've been in an uptrend for a while, we've been pushing up, especially from here. We've been pushing up, but you notice that price will go and sometimes goes below, and sometimes goes even further below, comes up again below. But you notice that most times price will remain above the moving average. Okay, so I can use this to my advantage. So one of the things that you don't consider, let me just quickly show you, is that when you're using moving average, to show you the strength of the moving average and the momentum, price should be breaking above previous highs. And when it's retesting, it's coming back to previous highs that was broken. What do I mean? So let me just see if I can get some examples for here. Okay, so this was when price started to trend to the upside, right? Good. Now we need a first high. We need a reference point. Usually you need a reference point. Okay. Now once I just show you, just replicate on your chart. Now this is just a simple strategy to pick trades. You can pick trades at any time and with any time frame you choose. Any time frame. It doesn't matter the time frame. You can use your 5 minutes, 15 minutes, 1 hour, 30 minutes, 4 hours, even your daily. All right. With this same simple strategy. So just you see price started pushing to the upside above moving average. Now a lot of persons will buy when price crosses above moving average, right? Yes, that's one way. Sometimes it just goes, sometimes you test before it finally goes. Now we need price to break above a high first. And once price does that, it's a reference point for us to keep trading in future. So for instance, price created this high, it came below, it has not broken any high again. Now it went above to break this high. This is where I become confident. So what happens is after price crosses above moving average, perhaps you place the buy and it goes to the upside. Then it's coming down. You are wondering if this level will hold and push price back to the upside, right? Just make sure that this level is coinciding with a previous high. This previous high that was broken, right? So you notice I came back to that level, it held, and it pushed price back up again. Now, price coming down around that level again. So let me use this one now. So you notice around these two highs, price broke above these two levels. So if you take the upper one to the lower one and you extend it this way, you'll notice that price will break moving average temporarily. So some persons will just quickly jump into sell, not knowing that price will come back above moving average again. Right, so it's just targeting this area. So this area is still lower than the moving average, so it wouldn't stop there. It will come lower, pick this level before going back up again. All right, most times this is just one very simple trick of using moving average, which you can use to trade anything whatsoever. Now there are times where, so you notice that this was the last highs, the last level, and price got there and did not hold. Moving average stopped it from going further up. Just know that price is now in a massive retracement phase. Okay, massive retracement phase. In that case, if you are trading this, buying it back to the upside, right, it will hit your stop loss. So what we'll do is that we don't buy it. So for instance, in this case here, You wouldn't buy it. You wait for price to go back above moving average before buying. It's just a simple trick, right? Back above. That's to tell you if price will go back up. Now, in this instance, if I was waiting for price, notice that it came below, right? It tried going up. So I was waiting for it to go back up to buy, but it tried going up and it couldn't. That means I wouldn't have bought this. I wouldn't. I wouldn't have bought it. Now it goes back up. Like I said, you just enter your buy immediately, but check a high that was broken. This was a high. If you put it right here, you notice that price came back looking for this high, did not even get there before going back to the upside, right? So price does this a lot. It broke above this high while going up. If you notice, it came around that level and it could push back up, then we buy it. So this is one simple trick of using your moving average to trade. Now, fast forward to current market price. What am I expecting? So if we use the same trick, which means you see this level right here, this was a good high that was broken when price passed here, which means momentarily you can see price breaking below moving average. That doesn't mean price is overall going to the downside. So it means that price can come tap into this level before reversing back to the upside. Okay, so that is a simple trick. Now, if price gets here and start pushing up, we can go long. But if price breaks here and it cannot push above moving average, then we can go short. Just like instance where I showed you this one. All right, instance where I showed you this one. Then you can be looking for sell opportunities. All right, you can see if we moving average stops it, then you can sell to for a while before price pushes back up again. So as much as the trend is an uptrend, price is not going up every single time. It goes up more, it retraces, right? We have impulse correction, right? So you want to see what the correction will look like and wait for it to cross back above moving average. You take your trades. Yes. Adeola, you raise your hand. Yes. Quickly go ahead, please.
Okay, I want to
Yes.
know the two moving averages that you are using.
Yeah, 21 and 50. And they are both
All right.
exponential.
All
Yeah,
right, thanks.
you're welcome. So the moving averages are 21. The red is 21. Let me see, the red is 21 moving average, and the green is 50 moving average. 21 and 50. So you can see the red is 21 and is exponential. Then the green is 50. 50 and is also exponential. Yes, you have something to say again? Okay, Idris. Yes, please go ahead, Idris. You can unmute and ask a question before we proceed.
Good morning, sir.
Good morning, sir. Good morning.
Yeah. Last week Wednesday when I was on a trade on US 100, on my
Yes.
MT4, the price gapped up with about 200 points or so. When I checked my NT5, that gap was not there. So there's a difference of about 200 points between my MT4 account and MT5 account on US 100. What could be the reason for the difference?
Are you sure both accounts are rally accounts?
Yes, sir. Then the both are rally accounts. Yes.
Okay. All right. So just fast forward it to or forward it to your account managers. Your account manager will look into it. All right. Just forward it to your account manager and will look into it. Now, basically, they are practically the same. All right. They are practically the same. So it might be from the liquidity provider. We can't tell, but whatever you see on your MT4 is exactly the same thing on your MT5. Exactly. The market is everywhere. In fact, with another broker, when you see US 100 going up, if you check with another broker, you see that upward movement, right? Now, if, for instance, there is a gap between your MT4 and MT5, if you go and check your MT5 or your MT4, you will see that it's either there was no gap, but a candle filled that gap. Right? So there cannot be that empty space. A candle filled it. Maybe US your MT4 did that gap, but your MT5, a candle filled that gap for you. So it will still be practically the same thing when we check it. All right. So let's not spend much time. Just forward it to your account manager. I'll look into it. All right. One more question, please. Anthony, yes, go ahead. For you. Yes, Anthony, please go ahead. All right, let's continue then.
Hello?
Let me check. Yes, please.
Can you hear me?
Yes, I can.
Hello?
I can hear you. I can hear you.
Hello?
I can hear you.
Okay. Oh, you are not using something like stochastic or those kind of a thing.
Well,
Hello?
okay. Can
You are
you hear
not,
me?
yeah, I can hear you.
We can't use all the technical indicators in one at a go. So I just chose to use moving average today. All right.
Okay, because I know some people combine moving average with all those momentum indicators.
Okay. Well, I don't combine. I use them separately. But irrespective of whatever technical indicator you are using, it's also very good to consider your price action, right? And especially
Yes.
your market structure. So for instance, if we are going to even add that, for instance, because you never can tell. Some of these things are what people look out to give you further good entries, right? So if we look at our stochastic, right? Let's say now, let me just even use the default. Let's say we use the default. So stochastic basically talks about overbought and oversold. So price has been overbought and it depends on your time frame. So currently price is heading towards our oversold region, which is all the way to the down here, right? So we expect it to maybe still push lower before turning to the upside, because most times price should enter your lower region before pushing upside. If it enters, it's a good entry. If it enters your lower region, it's a good entry. Enters your lower region, it's a good entry. So for those who do not understand stochastic, I'm sorry, we'll look for a time to talk about stochastic indicators, all right? So we cannot go into it today. Now, so basically, I just give you some tips on using it. So we expect price to do some retracement before continuing to the upside. So that's for the euro dollar. And the same thing for GBP USD. So our directional bias, this is a daily time frame. And you can see that we are still bullish on the daily. On the daily, we are still bullish. Let me hide this. Okay, good. So we are still very much bullish on the daily, which means on our 4 hours, we still see that bullish momentum, right? So check it out again. This is 4-hour time frame. This is my 4-hour time frame. Like I said, you can do this on any time frame whatsoever. Any time frame whatsoever. Okay, so we expect price to keep going up. So how will I tell if this will hold, if this bounce will hold, right? So you see this high that was broken. You see this high also that was broken. These two that are very close to each other. You map it this way. Now notice that there was a gap down at this level from here to this point. There was a gap. So it becomes inconsequential. Now price came back to the upside. And the next time it came back normally, notice it rested around this region before pushing back to the upside. Okay. And if you move it further, the same thing. Look at this high that was taken out here. When price came back, notice it tapped into this level overall before pushing back to the upside. So you combine this, your structure, with your moving average for better entries, right? Now, guess what? So once things happen like that, these are high probability trade setup where you want to maximize. So these are not the trades you use 0.01 or the least 0.1 is standard lot, maximize profit. Like, how will I put it now? Let me not spoil, because some persons are afraid to use some good lot size. Now, if I'm confident of my trade, trust me, I go in hard, all right? I go in hard. But before then, I would have done my due diligence. Right? Now, the reason why you notice that you place a trade, maybe spread and a little bit of drawdown, you are seeing some negative, you get afraid, and the moment price just turns blue, blue, especially with your mobile phone, the moment it turns blue, you're in profit, you quickly want to yank off the trade, you don't want that profit to disappear again. Now, that's because you are not confident in what you are doing. You have no confidence whatsoever. If you know exactly what you are doing, you have a strategy that you are working with, And you have found that strategy to be true most often than not. Now, most often than not means not all the time, but at least 9 out of 10, 8 out of 10, 7 out of 10 is still good, right? 7 out of 10 is still good because you can never predict price 100%. So we are just trying our best to analyze to see, okay, what does price do most often than not? It becomes a strategy if you can find it, which I'm showing you one. So once price does this, this is going to be significant. Notice that when price, there was this massive distance between this high and price went for a long time. After which, we will need to see some retracement again. This has nothing to do with, oh, my moving average should be bouncing up. No, moving average is not used that way. Moving average just tells us when the momentum is strong and when the momentum is not strong, as at every single time price is moving. So this tells us momentum was massively strong around this area. Price was pushing to the upside, but it left a massive imbalance. It's just like you are building a house. You are building a house. Price moves in structure. If you lay the first block, after the foundation, you lay the block. You've done the foundation. You can't put block 1 and you go and lay block 3. It's not possible. You have to lay block 2, block 3, block 4. So price moves sequentially in that order, right? So for price to continue on this momentum, it needs to come and fill this massive gap that it has left. This massive gap from this level here all the way to the highest point it got to. All right, it needs to come and fill it. So if it doesn't fill it, irrespective of the fact that it left this upper gap here, this one becomes inconsequential. This is like block 1. You've gone, you want to now lay this, it has gone massively up. So this is like block 3. So you need to come and lay block 2 before continuing that momentum, right? So this is just a single strategy, and when we find it to be true, most often than not, we just enter the trade. Now, after filling this, now see what happens. After filling this, it goes to the upside. Now, this is when the next one becomes very consequential. So something like this. If I put this one here, I'm expecting price. Notice that price came and it gave me a good hit. So one of two things is either I take the trade from there. Now, you don't know if price will get to moving average and bounce back down, right? If it can go back above moving average, I buy it and that's all. No looking back. No looking back. We have massive trade setup. No looking back, right? Even fast forward to current market price. Fast forward to current market price. If you look at this highs here that price recently took out, notice that it came back to this level again. It came back to this level again before pushing up. So as at when price pushed up, I've been buying this. Now we are expecting another retracement, isn't it? So one of two things will happen. Is either price keep pushing to the upside or retraces back down. Since we don't have another new high as our reference, this is still the high. Price has not really taken out all of these highs to say, right? So this is just a simple way of having a high probability trade setup. Yes, let's see. All right. Okay, how do you take your chart back? So if you notice, if I take mine back to return, but this is what we do. So if you take it back and it returns, right? This is what you do. You click on this. Scroll to the end of the tick. So you click on this. So let me say if I do this now, see, and it returns. If it returns, I'll just simply click on this. I'll do it again. If it returns again, I click on it the second time, then it will return again. So just very simple, right? Okay. Same value work in moving averages, or you can use different values. Can you elaborate further, please? Unfortunately, this is not a moving average class, though I wish to elaborate further. But the value used for your moving average is dependent on your kind of trader. So we have scalpers, we have day traders, we have swing traders, right? So I'm using this value the 21 and 50, if you notice they are a bit high. We have 5, we have 8, we have 10, we have 14, you know, in fact, 15, you can use whatever figure. So if I'm using lower moving averages, I'm scalping. You are basically scalping. So you are trading like all these in-betweens are scalpers. But this is a 4-hour time frame. This is a higher moving average, which means that I want to swing trade this. Now, I can decide not to swing trade it. I can decide not to swing trade. I can decide that, okay, as long as you fall into the direction. So imagine that price got to this point, and I know that price will be pushing up. I can just simply scale down to my lower time frame. Let's see from here when I had this hit right here, right? So let's say I scale down to my lower time frame, even 15 minutes time frame. And let me look for that area. So you notice that on my 15 minutes time frame, it will look like a trend. It will look like a trend on my 15 minutes time frame. So you can maximize profitability. So whatever you are doing, look at it. So this was the point where price hit where I wanted to, and it started going up. I can use my 15 moving average. So this is my 15 moving average. Imagine buying from here. See how many pips that price covered. Imagine I take a buy from here, you know, at least almost 53 pips. 53 pips first, right? Then I wait for it again to go back above moving average again. I catch another 86 pips again, you know. So you can just use it as, you know, as you want to. So I can decide to use the same strategy. So that's about it. All right. So that's for GBP USD. So we are still keeping this place constant. On my 1-hour time frame, though, I have this level right here. So if you're trading the same thing, 1-hour time frame, this is the high that was taken out. So you just literally wait for this to happen, given that we are still in an uptrend, and for us to push even further higher, right? For us to push further higher. But if it breaks this level, if it breaks these levels, and it tries returning and moving average, stops it from going back up, serves as a resistance, for instance, here now, then you can sell temporarily, right? Then we can go bearish. Okay. So let's see. All right, so GBP JPY is still pushing to the upside, and if you use the same strategy here, you notice you'll find it to be true. If you use this strategy, you find it to be true, especially if I use it on even a much higher time frame. You find it most often than not to be true. Okay, so look at how price. Let me go back a bit. Now, this was when massive retracement, right? Massive retracement. Now, the moment it climbed above my moving average and it goes up and it's coming down, look at the high that it recently took out, right? This high that was taken out, right? Significant high. Now, if this high, there's this high, there's this high, there's this high. There are 3 highs. So if I even move all of them, you know, this price came to this level. Although it didn't give me that touch, but it respected it and pushed to the upside again. Now, notice, remember the block. There's this high before this high, right? So when price came, push lower, going to the upside, you see this high. If you are considering just this high, then price comes slightly lower. But if I have both this one and this highs, then it will be good. All right. So notice in between, it pushed back to the upside. Why? Our current directional bias has been back to the upside. Although not back to the all-time high, but is pushing back to the upside. See that we are in an uptrend, but price is trapped inside the range right now, but still in an uptrend, right? Still in that uptrend. So if you bring this to current market price, so price recently took out all of these highs, all of them, because they are like almost equal highs, and it has gone to the upside. So we can expect this to happen before a further push to the upside. Now, alternatively, right? Because remember I said you can't predict price 100%, right? But we are just trying to follow what price does most often than not. If price does this, push lower, and it goes below this levels right here, you can sell temporarily. Yes. So if it breaks below this level, we become bearish. But if this level holds and it goes back above moving average, then we continue the bullish momentum for price at the moment. Yes, Mr. Anthony, please a quick one. Yes, please go ahead.
Yes, how do you combine this technical analysis with fundamental analysis? Seeing what's happening in recent times, there's a lot of news, a lot of rumors. So how can one combine this technical analysis with the fundamentals? Because one small fundamental can change every technical analysis somebody have done. So how can
Yes.
somebody...
Oh, I'm so sorry. Please go ahead. I'm so sorry. I thought you were done.
I say, how can somebody marry the two? You know, this is a
Okay.
very beautiful, very fine technical analysis, but how do you marry with the fundamentals?
All right. So now fundamentals are things that we cannot escape. And guess what? Fundamentals are good for the market. You trade them, you don't trade them. We need fundamentals. Fundamentals brings in liquidity, which is money to the market, brings more buyers, more sellers, more money, which is good for us as traders. So we want them to happen, but you don't want them to happen when you want to take your entry. So for instance, since last week, Friday, USD CHF was Friday last week. Be looking out for sell. This was Friday last week. Be looking out for sell for USD CHF on Friday. In fact, so that Friday, the moment price got into this level like this, started to sell. Now, if fundamental happens, you know, I noticed that on Monday, when price opened first, it came down, went back up, and all through Monday, all through Tuesday, it has been selling, right? The same thing for USD CAD. Now, if fundamental happens, fundamental can just give what we call temporary setback. Fundamental can take price to the next level. You need to identify your significant level. So if fundamental happens, most likely it will just take price back to these levels right here. These levels. Now, also you need to know the nature of that fundamental. If it's things like CPI, consumer price index, you know, that is it has a way of lasting, living how that be done. It has a way of lasting long in the market, the effect. So we have the short run effect, the long run effect. The short run effect is that at that moment the news comes out, you just see some shock in the market, that pull. But over time, you see that price will start going in the direction of that particular. So if it is not CPI, not NFP, those are the major players. If it's just things like let's say GDP or probably unemployment claims or job lots, you know, things like that, then those ones, their effect don't last long in the market. So you need to know what kind of fundamental you are even dealing with, right? And you can decide to wait out the fundamentals before, if the fundamental does not scatter your analysis, then you can still go ahead after the fundamentals, right? Because we can't escape fundamentals. You can never escape fundamentals. Okay, so where were we? We're in GBP. Yes. All right. So this is, we've concluded on that. I just like to run through all my currencies first before we dive into other things, just for that sake. All right. NZD USD also, if you look at it, the directional bias on your, this is my daily. Okay. Now on my daily time frame, my current directional bias is to the upside, right? To the upside. We recently experienced some massive retracements to the downside, but currently is back to the upside, right? It's back to the upside. Now, on my 4-hour time frame also, notice is also to the upside. Right? You can see it's to the upside. So we've identified our directional bias, and we also would like to see how price is moving alongside that bias. The way Euro USD moves is slightly different from GBP USD, different from NZD, different from GBP JPY, different. There are some slight difference. Even though the model is the same, but there are some slight difference in the movement of these currencies. So now, this is my 4-hour time frame on NZD USD. So you find it also to be true most often than not. Okay, see it's returning. So if I click this for the last time, it shouldn't return. All right, it shouldn't. Okay, so just take cognizance of highs that was broken. So for instance, now we have price came back to the upside, moved massively, and this level here was taken out, and it coincided with this high. So if I have them together like this, so fast forward to future, you see that price held at this point. Now, whenever price breaks below moving average, your job is to go look left to the past. So for instance, if price breaks below, what I need to do is just to look left. Where is price heading to? Which level does price want to feel before continuing to the upside? Okay. First of all, you need to know your directional bias. We are up, but price is going down against the trend. Usually, it's trying to cover, that particular level. It's trying to maintain that structure, right? So you just need to find where it's trying to cover. So you see something like this going, just go to the past and locate that last significant high that was taken out. So you see price came to that level and it stopped there. So before now, after now, price has not taken out any other significant level. It hasn't taken out any other significant level, right? So these are significant levels, still holds, right? Still holds. It still holds, right? So which means that the way this NZD-USD is trending is different from the way Euro USD, GBP USD, JPY, all those ones that I've analyzed is trending. This is not giving us a uptrend. It gives us push, it gives us massive retracement, push, some significant retracement, and we are still expecting further push. Now, which means that if price breaks above moving average, you can buy, and if price breaks below moving average, you can sell till this point. You can sell it to this point, right? So given the kind of movement, you can buy it if it breaks back below. So from here, we are still expecting a further push to the upside because it just recently broke above moving average. But alternatively, if it comes back, you can sell it till this significant level that we are currently working with, right? So that is for NZD USD. Just very simple strategy, and you'll be amazed how well it works. A lot of you just want to complicate things. Trust me, the market is not that complicated. You are the ones complicating the markets, right? You complicate the market a lot. Okay. So US 30. Now, if you look at the same structure, these are daily time frame, and our current momentum back on the daily is to the upside. Our current momentum to the daily is back to the upside. But since then, we've been having this range and this range. So we need a breakout of this particular range, which we are seeing right now. So if I use my, let me just apply the moving average. I don't want to just take out what I've done. Okay. Let me just apply my moving averages afresh. Okay, I should have 50, then 21. Okay, I would like to use red for 21. Now the same parameters still hold exponential. Oh, okay, it's fine. I know anything red or close to red is my 21. Okay, so you've been seeing the same thing, and you notice you'll find it to be true most often than not. Even your almighty indices, right? Even your almighty indices. So this was a high that was taken out, massive high, taken out, right? The significant high. Okay, let me put it this way: significant high that was taken out, right? So if you just the price comes back to that level. Now there are some other smaller highs. Smaller highs will give you some smaller movements. What do I mean? Let me use the same. Let me use the same stuff here. Smaller highs will give you smaller movements, which is if you notice this high here was later taken out all the way here, right? So if you would just put this right here, you notice that price will sometimes, it didn't get there all the way, but it came very close. But if you extend it up to this high, you notice it came close. Now, this is just for the scalpers. You are looking at every Tom, Dick, and Harry, right? Scalping takes smaller movements and they are good. But you want to look at the overall picture to see where price will go to for a long time. Let's say for 2 days, 3 days, even possibly a week, then you can use your much more higher time frames to do that. So if it aligns, then you can come to your lower time frames and just keep exploiting, maximizing the opportunities there. All right. So if you look at this high also, if you put it right here, you notice it to be true. Now, but if you want to deal with only significant highs are this right here, significant highs, where after price got here, there was massive retracement to the downside. And you extend it also, you notice also you find it to be true. So irrespective of how you want to do it, you will still get good entries, right? If you become so good at this, trading becomes like really easy for you, really easy. Now notice that this was a high that was taken out massively till we got to this level, right? So if you also put this here, right? Okay, so this is where we are still working with. So what I'm saying now is price has been trapped in between this level for our support and this level for our resistance. Now, we are now seeing a breakout. So a breakout will signify bullish momentum for us to want to look for buys, right? But if it breaks back down, so you can look for sell up until this particular level for your US 30. Now, there are two things when we are doing analysis. There's your trade idea. Now, this is like an idea. Now, when it should become, you need to take action can be different from when you are doing the analysis. So when you analyze, right, you are doing three things. You are analyzing, right? Then you are anticipating. So after the analysis, you anticipate, okay, what price will do next. And when price does it, then you execute. Okay, so execution time is, the analysis time is very important. Anticipation time, you can just wait it out. But execution time is mostly important, right? Because you need to execute. If you don't execute, you are not going to make any profit. So all things being equal, we expect US 30 to keep pushing to the upside. Alternatively, if it comes back down and this level doesn't hold, you can sell it back to the downside. Yeah, you can sell it back to the downside. Yeah. All right. I've been really rooting for coffee to go back to the upside, but unfortunately, it's still trending further to the downside. Still trending further to the downside. We were bullish before, massively bullish. Price changed direction. So our current overall trend is still bullish, right? But currently, if you are buying it, you find yourself in a lot of trouble. So we want to see what price is doing currently. So let me apply this also. Okay. All right. So you'll see that from these levels, when price was massively bullish and it started trending to the downside. So let's look at what we've been talking about since. So naturally, you're advised to look left when price breaks. Please, okay, just check if you are not muted so that you can mute yourself. So you see all of these highs, all of them are very close to each other. So I pick all the highs. And let's keep extending. Let's see. This is too large. Let's narrow it. Let's narrow it to the most recent ones. Okay. Okay, you see that price gave us, held a bit here, it came back above, held here again, came back above, and now it has broken it. So that's why I was rooting for coffee to go up, but it has broken every point. And now the next point that it can even head to is this. The next point it can head to is this. Excuse me. Okay. All right. So from all indication, coffee is putting us the bearish seat. Bearish momentum, massively bearish momentum. So we now, this time around, instead of using your recent high that was broken, you are now going to use recent low that was broken. All right, recent low that was broken. So which is this particular low that was broken here. So we wait for price to come and give us some retest into these levels for us to have a further sell opportunity. For profit, right? So that is what we do. Now, if you want to combine it with your moving averages, when price does this retest, it can go above moving average, which is fine. Now, if it attempts coming back down, what we are expecting, and moving average stops it from going back to the downside, then you buy it. All right, then you buy it. Okay, please head over to YouTube, watch this video again, because some persons might need to listen to what I'm saying again and again in order to understand and digest it. Okay, understand that some of you are just getting some of these tips for the very first time, even though you've been using moving average for a while. Now, guess what? There are other little tips about it. We don't have enough time to talk about them. We don't really have enough time to talk about them. There are other tips that you need to add, but trust me, they are not difficult if you can master. Please, let's make sure we are all famous, right? Okay, Aju Emmanuel. Yes, please go ahead. Aju Emmanuel.
Yeah, good morning, sir.
Good morning,
Please,
sir.
can we look at also this gold and US 100?
Okay, so if you notice what I said last week, oh my God. All right. Now, the truth is that one of the things that I avoid personally doing is, from my experience, I'm in Abuja here, and I see a lot of persons who want to trade gold, want to trade US 100. Now, these are very, very extremely volatile instruments to trade. If you don't have the funds to trade them, please stay out. That's the truth, because your 100K, your 200, even your 500K is risky trading them. If you don't have up to millions in your account, leave it. I see a lot of people who would use the trade idea to want to trade them. And if it doesn't pan out, they find themselves in huge losses. I know a lot of persons that will just tell me, oh, I'm in gold now. I'm in US 100, serious negative. It's trying to blow my account. What do I do? So that's why sometimes I just leave it completely. I talk about things that you can trade that will give you some good level of profit. Now, even if this is the catch, let's say, where's the gold? Even if this is good, for instance, even if you are looking for a trade on gold, and let's say you would like to buy, so let me, where's my, all right. So let's say I'm looking for a buy opportunity if price goes above moving average, right? Good. Now, if because of the volatile nature of gold, price goes above moving average first, and I take the buy. If gold just does some retracement, hope you know it's significant trouble, like massive trouble. just imagine what happened here. Good. Gold goes above moving average, you want to buy, and it comes back down like this. It can wipe out your account, especially if it's a small account, right? So that's why sometimes we just avoid talking about it because there's a lot of complaints about them. Yes, some people make profit, but those that don't make profit with small accounts, they just tend to. So I do gold trade, we do analysis, my personal trading, and even in class here, we talk about gold, we do our trainings, right? But we also give that advice, please, right? Because we want to avoid stories that touch. Okay, so if gold goes above moving average, yes, it can be a buy opportunity. And if it comes back below moving average, it's a sell opportunity. Just make sure you have your stop loss in place to avoid stories that touch. Then the same thing for US 100. The last time we're looking for a breakout. The last time we're looking for a breakout, right? The last time we're looking for that particular breakout from this high. I told you that if price gets here, we are waiting reaction. If it will break it or not. And price has been ranging around that level all through. So that was all through last week. Yeah, the last time we met was last week, Wednesday, right? So price has been ranging around that level. So you can see price just ranging. This should be Wednesday, Tuesday, Monday, Friday, Thursday, Wednesday. So you can see it was just moving up and down, up and down. Now it's trying to break out, right? Now it's trying to break out. So there is a break and retest, there's a break and continuous. So even if you are trying to buy the breakout, be careful of the retracement, right? Be careful of the retracement. So, because even if I tell you now to buy US 100 based on the analysis, if US 100 just does from here to here, I can tell you a good number of persons that will call me to tell me the account is wide, even though US 100 eventually will still pull up. So these are some of the reasons why, if you notice me, I personally have been trying to avoid talking about some of these instruments general to people that wipe their accounts. All right, so yes, it has broken out. It looks more of buy, but please be wary of retracements, right? Yeah. Let me see. Are you sure you want to trade oil right now? Somebody saying oil. Are you sure you want to trade oil right now? All right. Are you sure? I'm not, I don't even have it here. Okay. All right. Now, this has been crazy. Now, this is the funny thing is that whatever analysis you are using, because before now, we would be looking out for we'll be looking out for possible buys because on our 4-hour time frame, it's looking like price has changed direction, want to become bullish again on 4-hour time frame. Now, remember, there's a difference between the overall trend and the intermediate trend. What we have been working with since has been the intermediate trend. Right, the intermediate trend is what we have been working with since. All right. So what is driving oil right now is not technical analysis. All right, this is a huge fundamental of the ongoing war. All right, a huge fundamental for the ongoing war. Right. So let me, for the sake of our analysis, all right, so now remember we had this bend right here. So when we are having the bend, remember if we are down, because we've been down before, right? We've been down, down, down. So all things being equal, if we were still going to remain down, which means that we'll be considering where price recently took out, where price recently broke. Okay. So if you are considering, excuse me, we're considering these particular highs, right here, which is a significant supply area. For those who trade supply demand, right here, supply demand area. Now you notice that this place was taken out clearly. Normally, it shouldn't have taken out this area. Now it took it out. If it takes it out, then we should continue being bullish, most likely. Just retest and continue. But the war brought us back down again. So you can see that there's no amount of analysis you want to do. You just have to follow the news. And guess what? Now we are seeing the downside. On Monday, let me see. On Monday, we saw this massive push to the downside. Yesterday, it was not as massive as. So I wouldn't just want to jump into sales because of this one, right? I wouldn't just want to jump into sales because of this. Remember, if you have been trading for a while and you understand that price moves in structure, it has left a massive gap right here. Even though it's fundamental, you see all these levels, it has left this massive gap here that needs to be covered. So if you want to sell oil right now and price decide to cover this gap, even before continuing that sell, there will be massive problem for you, right? So that's why I said, are you sure you want to be trading oil right now, right? So there are other instruments you can trade. Yes, you can still take advantage of the sell. But note, for me, if I would sell, I will wait for a retracement first. I will wait for a retracement first before I will sell. At least cover this gap to an extent. So, which means that I can use my Fibonacci retracement tool, and anything above 50%, anything above 50%, all right, exactly. You can see 50% retracement here. Anything above, and I see price turning back to the downside, then I would sell, especially when it turns to the downside and it breaks below moving average. Then I have a trade opportunity. Okay, so that is for oil. I know somebody who does wheat. Where's my wheat? Okay, good. All right. Yeah, this was even what we marked. So we're looking at wheat pushing further to the downside, which it did the following day. Yes. So since then, wheat has been pushing back to the upside. Now remember, let me push us back to this. Okay. So this is wheat. Wheat is still giving us that downward push, right? Wheat is still giving us that downward push. Okay. So, but we had this, that was why I said last week that it was going to keep pushing to the downside. It just needed some retracement. Now that wheat has changed direction, is now pushing to the upside. So we would like to use this as strategy. See these two highs here? Right here, good. Now, we expect price to turn back to the upside, go back above moving average, right? Rest on it, and even push further higher, and take out this levels. Failure to do so, then we are back to the downside. All right, so this is what we are expecting that wheat should do, all things being equal. Right. So our time is fast spent. Unfortunately, we'll be able to continue. I need to go right now. It's about almost 9 a.m. So I hope you just look at the strategy, go back to YouTube, watch this video again to understand the concept to trade. And this very simple concept, you can use to trade almost anything, like anything whatsoever, anything at all, right? So wish you a very quickful day. For those who I didn't answer their questions, I'm so sorry. For those who I didn't have enough time to do justice to your questions, so sorry, it's lack of time, right? Please do well to attend our trainings so you can get more knowledge on trade and trade profitably. So thank you so much. Looking forward to see you again tomorrow.